Okay, this is part 5 of chapter 3. And we were just finishing up on accrued expenses. We looked at accrued revenue. Now we're going to look at accrued expenses. Barton Inc. pays its employees every Friday. Year end 12/31, 2007 falls on a Wednesday. As of December 31st, 2007, the employees have earned salaries of $47,250 for Monday through Wednesday. Because we're preparing financial statements as of December 31st, I need to get this expense into that period, even though they're not going to get paid until 2008. All right, so let's look at that. There's again a timeline. December 1st, 2007. The last pay date was December 26, 2007, and then year end is December 31st. So there's a little piece there of expenses that I need to record, and that's an adjusting entry. Now, remember, when you're talking about accruals, if it's accrued revenue, you're going to have a receivable account that will be in the adjusting entry. If it's accrued expenses, then you're going to have a payable account. Let's look at our entry. All right, so on December 31st, I have salary expense of $47,250, and there's my payable. I'm going to credit salaries payable for $47,250. And it's to accrue the 3 days worth of salary. That's expense that I've incurred in 2007. So before preparing my financial statements, I need to make this adjusting entry. And then finally, just to remind you, every adjusting entry, whether they are deferrals or accruals, there's going to be one account will be a revenue, will be an income statement account that you're affecting, and the other account will be the balance sheet account. So in this adjusting entry, salaries expense is our income statement account. Salaries payable, that's a liability, that's a balance sheet account. You've got to definitely get the chart of accounts in your head and know what's a balance sheet account, what's an income statement account. There's our T account, salary expense. December 31st, I'm going to add that $47,250. So in total, I've got salary expense for the year of $704,750. I haven't paid my employees yet for that $47,250, but I've incurred the expense, so I need to record it. And then if you look at the salaries payable, that's a balance sheet account. It's a liability, and so there's what I owe my employees. Okay, let's go on to looking at the trial balance. You remember in chapter 2, you would make your journal entries during the course of the year. Then you would prepare a trial balance to make sure your debits and credits um, were equal. And that's what we're doing here. What we're got on the screen here is a worksheet, and we're going to get into this in chapter 4. You're going to see how you can use a worksheet to help you streamline your journal entries and how you're looking at your business. So we put our trial balance numbers in there, and yep, the debits and credits tie, right? 45,300. Then in the next column, what I want to put is my adjusting entries. So I'll have this unadjusted trial balance, and then in the columns next to it in this worksheet, I'm going to put my adjustments because I need to adjust my accounts before I prepare financial statements. All right, so let's just look. There's my adjusting entries. And those letters next to those adjustments, they go hand in hand. Those are the entries. So entry A was a debit of $100 of insurance expense. And if you look, the corresponding credit is prepaid insurance. So we used up some of our prepaid insurance. That expense was expired, so we had to record the expense for that. So we credit. Um, Journal entry B, all right, we have supplies expense. We're debiting for $1,050, and the corresponding credit, is to our supply account. All right, so I put my adjustments in there, and now I want to prepare an adjusted trial balance. All we're doing is going across by the row. So let's start with cash. Cash is in the top there. It has a debit unadjusted trial balance of $3,950. If I go along, there's no adjustments to this account, So in my adjusted trial balance columns, I'm going to show a debit of 3,950. Let's skip down to one that has an adjusting entry. Let's look at supplies. So here, supplies on the unadjusted trial balance has a balance of 9,720. Then I have an adjusting entry, entry B, where I'm showing that I used $1,050 worth of supplies. And so the debit and the credit, I net them together, I'm going to have, the debits are higher. I'm going to have in my adjusted trial balance a debit of 8,670. Let's see if there's any adjusting entries that maybe go hand in hand with a credit and a credit, or a debit and a debit. And I don't see any except for the consulting revenue. If you look down, consulting revenue has a credit of 5,800. Then there's two entries that are affecting that. They're credits, $250, 1,800. I'm going to add my credits together, right? It's not like I have a credit and debit and have to take the difference. This is a credit and then a credit in the adjustment column. And so I add those together, and in my adjusted trial balance, I'm going to have a total adjusted trial balance amount in the credit field of 7,850. All right, so that's how you use a worksheet. You have your unadjusted trial balance. You're going to make your adjusting entries, plop them in there, and then you'll come up with your adjusted trial balance. And then from that adjusted trial balance, you want to know this. From the adjusted trial balance is where we prepare the financial statements. We do not prepare them from the general ledger. We prepare the financial statements from the adjusted trial balance. And what's the first financial statement we're going to prepare? The income statement. So from the adjusted trial balance, I'm going to get my revenue and expense and prepare my income statement. List my revenues down, list my expenses, and there's my net income. The next statement I want to prepare is the statement of owner's equity, right? We learned this, I think, in chapter 1. So I'm taking my net income of 3,785 and putting it into my statement of owner's equity. My capital amount was 30,000. I'm adding the net income. I'm subtracting out the drawings, and I'll come up with an ending capital of 33,185. And then finally, we'll prepare our balance sheet. And I'm looking at the adjusted trial balance. I've got all my assets. I'll list them down. Remember to include contra asset accounts in under your assets, right? You've got equipment and you've got less accumulated depreciation. Accumulated depreciation is a contra asset account. We're going to list that there. And so we total up all our assets. So even though that contra asset account has a credit balance, you can't include it as your liabilities, right? That accumulated depreciation is an asset. It's a contra asset. So you record it under your assets. Remember that. Then we list our liabilities down, and then of course we're going to take the capital from the statement of owner's equity, and that was 33,185. And then my balance sheet should be in balance. My total assets of 42,345 should equal my liabilities plus my equity, and that comes down to 42,345. All right, finally, here's the accounting cycle. All right, what we've learned so far: you're going to analyze transactions. You're going to journalize those transactions in the general journal. That's your original book of entry. Then you're going to post them to the general ledger or your T accounts. And then you're going to prepare an unadjusted trial balance. Then we'll make our adjusting entries. Then we prepare an adjusted trial balance. And from that, remember, not from your general ledger, but from that, the adjusted trial balance, we will prepare the financial statements, our balance sheet, our income statement, our statement of owner's equity. And then these other items that I have boxes to close, we're going to learn these items in chapter 4, but we will have to close the year out. After we prepare the financial statements at the end of the year, we'll have to close our books, and then we'll prepare a post-closing trial balance. And there's something that's optional. Another type of journal entry is called a reversing journal entry, but I think that's in an appendix, so don't worry about that. But again, analyze transactions, journalize them, you post them, you prepare an adjusted trial balance. That's all chapter 2. And chapter 3, what we discussed was the adjusting journal entries, preparing adjusted trial balance, and then preparing the financial statements. So those are the three boxes that you need to know for chapter 3. And then the other boxes will cover chapter 4. All right, we're done. That's chapter 3.